At Goodmanson, Jim Robb, our guest. We know there's a lot of things going on with this drought. There's a short supply, corn prices are high. A lot of forage experts say that not only is forage going to be tight, but even with rain, pastures are beyond help. So for a cattle producer now, is there at all a light at the end of this tunnel?
I think there is a longer term light at the end of this tunnel. We already have tight cattle supplies. We have some major adjustments going on because of the high feedstuff costs in the U.S. Dairy industry, pork industry, broiler industries. So we're looking at higher cattle prices ahead, especially in the second half of 2013. But we need a normal corn crop from a U.S. perspective to happen, and that's a ways down the road.
With overall cattle supply, do you see that it could go further? Is there more culling in store?
I think there is more culling ahead. I think the U.S. cattle inventory numbers will be down significantly on January 1, 2013, probably down again on 2014. From an economic perspective and from a natural resource perspective, this type of drought is a multi-year recovery process, so we won't see an immediate ramp up in the U.S. cattle numbers.
Let's look at ethanol. How effective would any level of ethanol mandate be? There are a lot of governors that are now signing waivers or asking for a waiver. How effective would it be if it happened?
Well, I think there's a lot of moving parts in that whole ethanol debate. What we're really talking about is changing the mandated level of usage. And if we look at it and how the oil industry is structured and how this is really an octane issue, that there's many moving parts that have to adjust, and the ethanol price or the profitability of producing ethanol is a function not only of corn costs, but the price of oil. So when we look overall and we look at a lot of economic studies that have been done recently, we'd have to say that even changing the mandate is probably a smaller impact on corn prices than many people perceive. And it could be probably less than 50 cents a bushel, given the nature and the structure of the industry.
With that said, with no immediate relief to be seen in the corn industry, what advice do you give to a guy who has to buy it?
Well, I think we're in a very high price range plateau, and the risk is, in terms of looking ahead to the next several months, that corn costs can actually, from a producer's perspective, actually go higher. So I think we have to do we can't just wait and look ahead and say things are going to get better. It's really going to take that 2013 crop. So if you have some feed needs, it may be better to get some of those locked in earlier rather than gambling on trying to pick those up in the winter months, for example.
You mentioned today that the export market increased a lot last year. What are you looking at this year for cattle?
For the beef side and for this whole industry, the export side was really a driver of our record high prices in 2011. We're not exporting as much beef tonnage as we did a year ago, so it's not the driver that it was last year. We're really relying on the domestic consumer, and domestic consumer demand has remained rather strong. Another aspect of that trade story is the amount of cattle that we import in the U.S., especially from Mexico. Those numbers are still high because of the drought in Mexico, but we're already seeing a pull down there in recent weeks and a pull down in the number of feeder cattle coming south from Canada. In fact, we could see largest in several years U.S. feeder cattle exports to Canada. So the whole mix is sort of changing right in front of us, and we're really at that critical time where a lot of those things are going to change.
Let's talk more about that domestic consumer. Do you see that his or her demand for the meat continues in either beef, poultry, pork? Do you think they'll still consume?
They will still consume, but if we look at an economist's perspective, demand has really two strong dimensions. It has the price side and the quantity that they're going to consume. So it's really a relationship. We see that beef demand is still posting year-to-year increases for the domestic consumer. We actually see that U.S. consumer domestic demand for chicken and pork has actually been declining for several quarters in a row. I think they'll still be strong buyers, but we're at record high price points. So they won't be eating as much, and we're going to produce less beef. So the confusion is that we're going to produce less, so we're going to consume less. That's really not necessarily directly declining demand. I think demand stays pretty strong in here, but we're going to see a consumer that is really feeling the pinch, and at record high beef prices, and if they continue to move higher, which they probably will, we're going to see some consumer shuffling probably happening at the meat case.
What's your confidence level in the overall state of the U.S. economy?
Well, we think the overall U.S. economy is anemic at best. We see economic GDP growth rates maybe 1.5% for the next several quarters, maybe getting to 2% in 2013. Those really aren't levels that give the consumer a lot more buying power. So we're really marking time overall for the next several quarters in the overall U.S. economy. One that does not slip back into recession, but certainly one that's not growing robustly at all.
Let's talk about overall cattle prices going forward. You see an increase as we go into next summer? I mean, tight supplies would lead you to believe so.
Tight supplies, pretty good demand. Probably export markets to maybe get a little bit better in the second half of 2013. I think with a normal corn crop in 2013, we'll be right back up to the price levels that we had a few months ago. We've had a real ratcheting down, for example, in calf prices in recent months. We probably have the bottom in here. A lot of uncertainty still ahead. But I think we look ahead even to 2014 and we're right back up to record levels and setting new all-time highs across the cattle marketplace.